back to what I was saying, to how I got this 1:13 trade right here. And before we go into it, please do click the link on the description box and join my Telegram channel. In this Telegram, or should I say our Telegram channel? Because in this Telegram channel, this is where I'll be sharing my setups. Of course, you can always take the trades with proper risk management, because as you all know, or as we all know, we are not the market makers. So the market could always do whatever it wants to do at any time. So please click the description box now that we've not started, and join our Telegram channel, right? Or you could click the comment section, check the pinned message. I would equally drop the link over there and you can join as well. Thank you so much for taking your time to join. So let's get back to why we are here. So on this fateful day, when was this, right? When was this? Okay, this was on Wednesday last week. That was when I took this trade. And lately, I'm not bent on taking much trades. No, my new rule now is 3 to 4 trades per week, and only trades that I feel are my A plus setups, right? No longer hopping onto trades or trying to capitalize on all the movements in the market. No, no. Now, back to this. How I caught this trade. I always do a top down analysis. I check the 4 hours or the 1 day to check where the market is going to. Check where the market is going to before I, start jumping into anything. So right here, you guys see this other block I marked out. So I was expecting the market to come, take out these liquidities here and tap on this other block, then wait for the market reaction from the other block. Either the market starts selling or the market breaks out of it and chooses to clear this weak liquidity and keeps buying. But what the market did was the market tapped on the weak and did a little reversal, a little pullback. This trade right here, I was very skeptical about it because I wasn't sure of what the market was about to do yet at the time. And on this 4 hours, as you can see, there is really nothing on this 4 hours time frame. So another thing I did was I went down to 1 hour. When you're not really seeing anything clear on one time frame, you go to a lower time frame. There might be a clearer structure on the lower time frame. So when I came to the lower time frame, I saw something interesting. And what was the interesting thing I saw on the lower time frame? Firstly, there was a break of structure here. I saw this break of structure, right? I saw this break of structure. Okay, I saw this break of structure, firstly. Then, secondly, there was another break of structure on the downside. Isn't that interesting? You guys know how BTC can be. BTC is one pair that when you are trading, you have to be, should I say, you have to be very careful with the pair. If not, and that's why you have to be focused on it, because this pair can send you to your village, just like how gold can send you to your village in the blink of an eye. Like, both of them move like the same. For me, they move the same way, like very volatile pairs. So there was a break of structure on the upside and there was a break of structure on the downside. So now, why did I choose to enter from this zone even after seeing this break of structure on the downside? Now, before I took this trade, I actually tagged this trade as a low probability trade, a high risk trade, because I saw this break of structure to the downside and a break of structure to the upside. But there was something more interesting I saw when I went to a lower time frame again. Now the markets rejected the zone. Now coming down to this time frame, right? 30 minutes. There is really no reason why I should take a buy from this zone, right? There is no reason why I should take a buy from this zone. Now I went to 15 minutes. 15 minutes. I went to 15 minutes. This is where the whole thing gets interesting. This is where the whole thing gets interesting. So on this 15 minutes, what did I see that made me take this trade? And that is why I used to a top-down analysis. Sometimes I go down to 5 minutes to just get a confirmation on the entry if I'm not seeing what I really want to see on 15 minutes. But most times I stop on 15 minutes, right? So what did I see here that made me think that this market will come here and buy? Boom. So when I came here to 15 minutes, I saw a break of structure. Can you spot the break of structure here? Let me give you a few seconds. Can you spot it? I know some of you might be confused. I'm not really seeing a break of structure here. So maybe you spot the break of structure. Okay, let me show you. Right here. This is where I spot the break of structure. I know some of you will be like, how were you able to spot this place as a break of structure? So I spot here as a break of structure because this is This is a buy candle and this is a sell candle. And when you see a buy candle and a sell candle, what does it indicate? What does it form? A resistance. This is a resistance in the market. But the market broke out of this resistance. The market broke out of this resistance, formed body above the resistance. And the market still did well to come above and break above this second resistance zone. But my main comfort, what I saw and assumed that this market was going to come down to this place again was when I saw this market broke this structure. Then there was another thing I saw. There was liquidity sweep. Liquidity sweep. Can you see? The market swept liquidity here. There was liquidity sweep, right? Then there was liquidity that the market would come and take out before tapping my POI. There was liquidity that the market would come and take out to tap this POI. What did I just say? Let's say POI. No, I mean POI. Yes. Uh-huh. So let's keep going. Now, are you guys understanding? Hope you guys are understanding. Maybe you need to rewatch this video. I am not so much of a good teacher, but I'll try because I would love to be making a lot of educational content, breaking down trades I take to you guys, or like things you should be expecting to spot in the market and all of that. I'm currently still on my journey of learning, but that doesn't mean that I can't, share the little knowledge that I'm still gaining with you guys. So as I said, there was a liquidity sweep here. Some would want to mark out this week that this is where the liquidity sweep happened. Fine, you're still right. The market still swept out the liquidity here, right? After that, the market broke the structure. Isn't that interesting, right? Then the market came back here, pulled back here, gave us a nice liquidity. Then the market still broke out. Okay, give us a full break, giving us a more clearer confirmation. Even broke out of this place too, giving us a clearer confirmation, right? Now, why did I tag this as a high risk trade? Because the market gave us a break here, right? And when the market gives you that break, what are you expecting? The market might, still keep selling. But I was expecting the market to still come here, maybe do a little play, then go up, take out this liquidity. Honestly, when I saw this place, I knew that here is likely to be liquidity. And I was expecting the market to come and tap here, right? But I wasn't so sure, and I said no, right? Let me just stop here and leave BTC for who get them. Because BTC is one pair that can BTC does whatever it wants. You cannot question it. Same with gold. They do whatever they want. So I said, let me just jejely, take my profit here and leave the market for who get them. Do you understand? Mm-hmm. And as you can see, when the market just tapped here, it just did pew. Like there was literally no sell candle formed. The market just tapped there and pew, went straight to my take profits, right? This is 15 minutes. So the market tapped here 15 minutes, the next 15 minutes, that's 30 minutes, then hits my take profits in the next 15 minutes. That's within 45 minutes, that's within 1 hour. The market had tapped my POI and I've taken profit. Isn't that a nice one? That is a beautiful one. So, but that doesn't mean that if I held from here to here, it would be so beautiful because I can even imagine that. Let us check what the RR would have been. 1:32. Oh, isn't that beautiful? Oh no. We would have to control our greed. But sometimes you guys will see me take trades like this and I'll still come and break it down for you guys. But when you are still coming up, you have to you have to respect yourself most times because like I would always say, no be me get market, right? We are not the owners of the market. The market can do whatever it wants to do. So imagine using $10 to take this trade, right? Use $10 to take this 1:32 RR trade, meaning you'll be aiming to get $320 from this trade times $10 by 32. 10 times 32 is equals to what? 320. That's what would have been made on this trade. But nevertheless, making 1:13 is still a very good one. Anyway, let's get back at it. Now, another question I know you people will be asking is, how did I mark here? Right? Why did I mark directly below these two candles? Now let's go to 5 minutes. Let's go to 5 minutes. Hope my network hasn't started. Ah, my goodness. This is one of the okay. Okay, yeah. So this is the trades that I got hit out on. Now the view is more clearer on. And now this is where I hit the break even on this trade. You guys won't believe what happened. As soon as I hit break even, oh, the market flew up. So down to 5 minutes. So yeah, now on the 5 minutes too. Did you guys see something interesting? This is another block on the 5 minutes. So a lot would have just marked out this other block on the 5 minutes. Mark it out this way. Mark it out this way on the 5 minutes. Then mark it out this way on the 5 minutes, right? Mark it out this way on the 5 minutes. Then still drag your SL. See, if you guys check now, my SL is below my entry point, right? So you guys must have been wondering why I am marked out here. This is a support zone, and I chose to mark out this support zone instead of using the other block. Now this place I used, markets that doesn't mean that if markets wanted to use the 5 minutes order block that's not using markets could choose to use the 5 minutes order block and leave me, and I will be wailing, oh, why didn't I use the 5 minutes order block? Oh, why did I do this? Oh, why did I do that? We all do that. When the market comes close to our PR and leave us and go hit TP, a lot of us will be like, hey, why didn't I use this? Oh my god, why didn't I? There will be why didn't? Okay, I use other blocks too. But why I use this is because when I looked at the 15 minutes, there was no other block formation on the 15 minutes. You could choose to mark out this other block. If you marked out this other block, you put your SL beneath here. The only thing is that you'll be risking a bit more than me, like your pips. Let me take this up and let's see what the pips would have been. This would have been a 1:6 trade. You'd have been risking 13.2 pips to make 86.7 pips, right? 86.7 pips, which is actually a good trade. 1:6, which is a beautiful one, right? Imagine risking $20. making 1:6. That's a good trade for a day. So let me quickly go over how I got this entry again. Let me go down to my 15 minutes, right? So we can wrap up this video. And don't forget to subscribe, as I would always say, to baby girl Perpetual, aka Pepiana. You can always reach out to me on Instagram. Do well to join my Telegram, because you could equally reach out to me on my Telegram directly. And as I said, I'll be posting my trades on Telegram. You're always free to take them, and you're always free to learn one or two, right, from my trades and from my mistakes. So let's get back to it. 15 minutes. Uh-huh. So on the 15 minutes, again, a quick breakdown. On the 15 minutes, as I said, I saw something interesting, which was a break of structure over here. The market broke above this resistance zone. The market did a liquidity sweep here. The market did a liquidity sweep on this zone. And as you guys saw, when we went down to 5 minutes, it was more clear, right? So I just don't use small time frames. No, I do my top down analysis. I go from higher time frames, look for entry, look for my zone. Then I now come, excuse me. Then I come down to lower time frames to get a precise entry, to get good entries. Because if you enter from higher time frames, your SL is always going to be massive. Well, depending on the type of strategy you trade, your SL will be massive. And who actually wants that? Who wants that? Uh-huh. And I am an intraday trader, right? So I just want to come, take my trades and leave the markets, not holding for no. Maybe very soon in future, when I have the big box, I'll be swing trading. But for now, I need some money to go get me some Indomie, some chocolates, ice cream, some parfait. So I'll need to just, come to the market, get the money, and I'm out to go get that. Uh-huh. So hope you guys understood what I explained here. Guys, honestly, right? I'm not good with teaching. But I will try. I feel most times when I'm even teaching forex mainly, like I get to confuse the people that I am trying to teach. But I hope you learned one or two from this video. Please, if you did that, don't forget to give this video a thumbs up, drop a comment in the comment section what next you'd like to see, and if you'd like to see me do more videos like this, do more breakdown videos explaining trades I took, or doing weekly bias analysis. But do well to join the Telegram, because we are both, we're all going to benefit from it, because you could be learning from me, and I could be learning from you when you come to my DM to talk to me, because my DM would be opened for people to message. So yeah, that's that about this week 1:13 RR trade that I took.